The biggest one is infrastructure because non-interest finance also mean that you are looking for business that has growth, with there can be share of profits at the end of it. So if we can put it into infrastructure, that clearly will go a long way. That has a long gestation period, so it does not lend itself to accumulation of interest on a regular basis.
Hello and welcome to Islamic Finance Weekly. I am Rahma Say Muhammad. As the theme stands, non-interest finance as a catalyst for national development. Today we're out to engage with enlightened individuals to tell us what are those non-interest finance tools that have been instrumental to, developing the Nigerian economy and what is the outlook for the coming years. So stay tuned with us to enjoy this engaging conversation.
It's very interesting because I think Nigeria is just waking up, especially the subnationals, to these instruments, non-interest finance and all of that. And I want to thank Alal economy stakeholders from being, because I was part of the inauguration ceremony in Abuja about 2 years ago. And this is going to help developing countries like Nigeria, simply because the burden of payment of interest on debt is going to be removed, and then we're going to see development at a very strong rate. Nigeria, with our population and the fact that the whole world is looking at Nigeria as a huge market, it will help grow the economy, and of course, partnering with Nigeria is partnering with the future. So that will all go well for world economy because Nigeria will soon become a hub. And like you said, the critical sector that requires this level of funding is the tech sector because that's the digital space where everything is happening right now. And if government can create an enabling environment and also financial instruments that can actually help startups grow up and become employers of labor, I think we should be smiling in a few years down the road.
As rightly stated, Nigeria is in need of financing. Do you get it? So we should be able to attract financing from different sources. And all of a sudden, the non-interest finance appears to be one that appeals to majority of Nigerians and also comes with terms that appear to be much more palatable and makes it much more accessible to Nigerians. So clearly, it's a step in the right direction. The key is just to give it more publicity and also to let people know the advantages of it. And I like the word you used, non-interest finance, so that you also have to remove the religious coloration from accessing those kinds of funding. And accordingly, non-interest finance can finance most things. You get it. It's other there are some areas of exclusion, which I think is understandable.
I think non-interest finance in Nigeria is growing. A few years back, it was quite nascent, but now we have about six non-interest banks in Nigeria. And the beauty of the structure of non-interest banking generally is the fact that uh, because there's no interest element, most of the banks like to structure deals that are viable and they provide the necessary kind of support to help those businesses, those deals to thrive. So for economies, and we've seen this in other economies across the world, for economies that are focused on non-interest banking, non-interest finance, you tend to see better project structuring. You tend to see projects viable into the long term. And for Nigeria, it can't be any different. What we have started to see is a lot of infrastructure projects funded by Sukuk. And these projects are done well. These projects are built to last for the long term. And we're beginning to see in other areas as well. So we're beginning to see corporate Sukuk also springing up here and there. And what it means is with these corporate Sukuks and the fact that it's a profit share type structure, at the end of the day, the businesses thrive. The banks themselves make profit because there's better due diligence and better structuring of the deal, and the economy itself benefits. Doesn't take away from traditional finance in any way, but it's an additional mix that benefits the entire economy as a whole.
Basically, because we're dealing with infrastructure projects,
We need long-term patient capital, which is clear. The popular option will be sukuk, right? Long-term sukuk, 7, 10 years thereabouts. Naira. We need, of course, in some cases, possible dollar sukuk. But more interestingly, we also need private placements. Private placements, they can be local, they can be foreign. They can stay on the books for a long time without pressures of repayment. Because when we talk about agricultural project, infrastructure projects, schools and electricity and all of these things, they require loads of patient capital. The fourth one for me will be some kind of unique guarantees. Because there's so much you can do with guarantees. When I say guarantees, I mean, if you got foreign guarantees, it doesn't have to be from federal government or from state government. In fact, sovereign guarantees are never adequate, and most of the time, federal government may not want to give sovereign guarantee. So it means you have to identify companies in foreign, countries that can give you those guarantees. Foreign banks that can give you on the back of those guarantees, you can raise any kind of instrument in Nigeria. They will also need, to some extent, elements of commercial paper, right, where the projects are already ongoing, or where you can do commercial paper back to back, right? Because those projects are quite short term, not particularly long term. We want to finish them up, right? But again, for those projects to happen, you don't want to sit on the guarantee of the state or the sovereign all the time. So again, you need those support instruments. Yes, foreign direct investment will be the fifth option, if I'm counting well. Foreign direct investment, which is basically direct investment, but it will have to be sovereign investments. Because there are sovereign funds all over the world. So you cannot just jump, you cannot just take debts, from commercial entities around the world because you want to do infrastructure projects. Now, all of these sources of funds will be structured in unique fashion. More specifically, even if I want to take debts, can it be convenient debt with law moratorium? And more importantly, also, can we do more of moderable kind of investments? You know, and even the guarantees will have elements of moratorium, if you know what I mean. So more specifically, we're talking about some kind of SBS, standard letter of credit, rather than just BGs that have to renew every year. More importantly, also, the costs of those guarantees should not be ridiculous. Because I'm happy that country risk has reduced. I mean, sorry, country risk has reduced. Rating agencies are giving us better ratings at this time. It means that we should potentially enjoy better pricing, right? On the back of that, we should be able to price our entire the risk bit of the pricing should be fair, shouldn't be out of way. So those elements will help in a very big way to reduce the overall impact of the fund. So costs, reduction in costs, the term of the facility should be long term enough, and then it should be patient enough in terms of repayment. Programs and events like this should be, organized for governors and various policymakers and stakeholders should come together on a round table because ignorance is deadly, and I'm sorry to say many of our stakeholders and policymakers are ignorant of these opportunities. So from time to time, there has to be investment in the creation of events and ceremonies to be able to talk about this.
I think the most obvious one you look at is the biggest one for is infrastructure, because non-interest finance also mean that you are looking for business that has growth, with there can be share of profit at the end of it. So if we can put it into infrastructure, that clearly will go a long way. That has a long gestation period, so it does not lend itself to accumulation of interest on a regular basis. But we realize with those kind of financing and this kind of infrastructure, by the time you compound interest, now ask yourself, how do we pay it back? Whereas we all know those infrastructural investments are the ones that give returns in the long run. So obviously it lends itself automatically to non-interest finance instruments.
It's a great catalyst for growth and development of any economy. So Nigeria cannot afford to lag behind as far as this is concerned. So it's the way to the future, easy credit or what you call easy money. that's what we need right now.
Those were fantastic perspectives from our speakers. I mean, we also heard from the president of the Non-Interest Finance Institutions Association of Nigeria, sharing his wealth of experience and those tools that he thinks are instrumental to the sustainable development of the country. Well, with that, I say, don't forget to keep status as next on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching. And as always, I am Rahma Say Mohammed.